Good evening. I'm again with another example. And this is also from the chapter Planned asset, and some transactions. So, December 31, 2019, the company reported following planned asset. Right, buildings, land, building, the net worth, equipment, and the net worth. And you see, here are their original, cost, right? Original cost, historical costs, but depreciated, and these are net assets. All right, net asset is $52 million, but during the year, the 2020, the company had such transactions. Right. The question A. Then we'll continue. The purchase land, $2,200,000. So we generalized all the transactions, and the company used straight line depreciation for building and equipment. Buildings are estimated to have 50-year life and no residual value. Equipment is estimated to have 10 years and no residual value. Update depreciation on the asset disposed of at the time of sales and retirement. So some part of the chapter question does not appear here because I couldn't copy it. Several times I tried, but I couldn't copy it. So record adjustment entries for depreciation for 2020, and C, prepare the planned asset sections of the company financial position at the end of the year 2020. That's the question. Now let's do this transaction. So we record paper 1, company purchase land. Alright, so land will be increased. This is our asset. $2,200,000. It is purchased, most probably company paid with the cash or other forms. Maybe some liability. Then B. Then company sold equipment that cost $750,000. So equipment we have total here $40 million. There are a lot of equipments inside. Under this item. One of the item or equipment is original historical cost is €750,000 when purchased on January 1, 2016. The equipment was sold at this price right now, May 1, 2020. Alright, now we need to find what? We need to, first of all, we need to record cash. Cash will increase, how much? $466,000. Alright, actually, due to these sales, company even selling its own equipment, if the company gain from these sales, then they will have some tax. But we are excluding this part. It's not our point in this chapter. Alright, now we need to find the accumulated depreciation. Let's find what is the cost. Cost is €750,000, sorry, and we need to find the accumulated depreciations of this asset. How can you find this accumulated depreciation? So €750,000. We don't have residual value and 1/10 because it is 10-year life, because it says it will be depreciated over 10 years, useful life or economic life. This is also called economic life. 10 years. And how many years already? It is purchased in 2016. Now 2019. Sorry, 19. So including 16, 17, 18, 19, 4 years. 4 years of 4 years of the accumulated depreciation. Each year this is depreciated. So if you find that, that will be how much it will be. Let's do this calculations. Calculator. So $750,000 euros, and so we find actually this is let's do like that, 4 over 10, right? So we get expressions, and 4 over 10. Actually, very stupid doing that. $750,000, and so we have $300,000. $300,000 is our accumulated depreciation, but it is sold at May 1. So 4 years plus 4 years plus from this year in 2020, May 1. So how many months passed? January, February, right? March and April, 4 months more. So you will add here sum of 4 months. This is the $225,000. I mean, if you say like that, we have $375,000 is the how much it is? $750,000 we have. Or historical cost, I mean the cost, and over 10 years depreciated. So each year 75,000. But we are depreciating 4 over 12. Each year $75,000 is depreciation expenses. From 2020, so it is depreciated also 4 months. Right, so 4 months, right? 4 over 12, 75,000. You find this is $25,000. So total accumulated depreciation is, in this case, $325,000. I mean, this is depreciation, accumulated depreciation, 4 years plus 4 months. So every year, it is depreciated 7,500, right? 4 years, 75,000 every year. 4 over 12, it is $25,000, right? So that will be 325. So then if you do that one, you find it is book value, right? Book value. So this is will be $425,000. Now the book value when it is May 1, 2020. This is the book value of this asset, this equipment. And what is the cash proceed? Cash proceeding from this $466,000. As cash proceed is greater than book value, so there is a gain on this puzzle. So company gain from this trade 41,000 euro. So you need to record this also. What we need to do, we get this 466. So equipment is gone. So we have to reduce this equipment. It is 750,000. So it is accumulated depreciation also will be removed. How much? It is this amount, right? 325,000. Because the asset is already disposed, $325,000. And so if you do this, and we have also gain on disposable So we have gained how much? 41,000. So that will be $41,000. So we have these transactions. Okay, and then what happens next? We continue the transactions. It says that sold land purchase on June 1, 2010 at 1,800,000 euro. Land cost 300,000. So what you will do, June 1. So we have cash. Cash will rise by 1,800,000. And the land is company purchased land at 300,000. That will be reduced. As you know, land cannot be depreciable. From this, you see, from this trade, company selling land maybe purchased several years ago at $300,000. Now it is market value. I mean, company is selling at 1,800,000. This is mostly, it is like a market value. We can say this is market value if the company is selling. Will not aim or agree to sell it less than it is market value. This is negotiated market value with the purchaser of this land. So the gain, there's a gain from this sales on disposable of asset land, you can say. So this is gain. How much difference is $1,500,000. So this is gain will be indicated in the income statements again, but as under the separate sections, like it is called loss and gain on the other incomes and gains, we can say. All right, July 1, another one, purchase equipment 2,450,000. So we record this also like July. This is June. This is July 1. So company purchase equipment at 2,450,000, and let's say cash reduce. Alright, and then end of the year we do adjustment entries, right? Now we know that December 31, before we prepare our financial statements, we know from very early chapter 3 that we need to adjust our accounts, because these assets are depreciated, right? And we need to calculate these depreciation expenses. Okay, so these are we will have now. So December 31, retired equipment that cost 500,000 when purchased on December 31, 2010. No residual value was received. Okay, so 500,000. So we retire it. It is first of all we need to calculate its depreciation expense. Depreciation expense and accumulated depreciation. This retired asset is this equipment. This retired equipment will be what it is, $500,000 historical cost 1/10. Yes, because 10 years all the assets, in this case 50,000, and this is $50,000. Now we retired then December 31. This is called bring the asset or update the depreciation of asset, or bring the asset updated depreciation value of the asset. First step. Then you can now accumulate depreciation since it is retired, because it is fully depreciated, so and retired, it means you are removing this asset. It is accumulated depreciation, and it is asset value also gone because it is fully depreciated. Alright, in this case, if you look at that one, cost is $500,000 and accumulated depreciation is also $500,000. So book value of this asset will be 0 because it says retired equipment that costs historical cost when it is purchased 10 years ago, no residual value is received, retired. So company is not receiving anything from this. Alright, now we do B. In the B, we need to do adjustment entries. You don't see this question, but here, record the adjustment entries for the depreciation 2020. So how much depreciation expense we need to record? Adjustment entries, right? For that, we need to find how much we have building. Alright, if you look at that one, so we have buildings and also asset, right? So building was what is started by 26,500,000. Yeah, so we have 26,500,000, and balance still is the same, right? Because the company didn't sell or purchase a new asset, or the company didn't do any expenditure on these buildings. That's why still it is 26,500. So depreciation expense for the building, we can say building. So what was the number of economic life or useful life of building? Is 50 years, right? I mean, simply saying 26,500,000 over each year, right? This amount. So this is depreciation expense for building. It will be $530,000, and the accumulated depreciation also for this all of the buildings. Maybe there are several buildings. Is also $530,000. And also we have equipment depreciation expense, equipment, but company retired and sold some equipments. Let's find equipments. So let's look at the ledgers. Equipment. And initially we have equipment. How much equipment? We have $4 million of equipment, right? As you see here, $4 million. It is here, $4 million. Later, what we did, company sold equipment $750,000. We need to reduce this one. 750,000. Let's say it is sold. This is beginning balance. Then what happened next? From the journal entries we can find company purchased another land, equipment, 2,450,000 equipment. So equipment $2,450,000. It is purchased and dispose or retire $500,000 of values of equipment. Maybe machines, I don't know. Maybe these machines are all. So balance is $41,200,000. So $41,200,000 equipment we have. So equipments are depreciated over 10 years, right? In this case, it will be but also one thing we forget. Okay, we have $41,200,000 of equipment, right? Which is what? But the equipment is purchased. When it's purchased, this equipment, you see, this equipment is purchased from July 1. So in 2000, if you go 2020, July 1 till December 31, how many months we have to depreciate it? 6 years, because it's not purchased at the beginning of the year. So 6 years it should be depreciated. In this case, our depreciation expense will be different. So if you calculate this, so let's put it like that, $38,750,000, because these are excluding this one. Because if you do that, so how many assets we have? Equipment, we have $4 million, and minus 750, sorry, and 750,000 and minus $500,000. And this is the asset which is purchased originally. I mean, several years ago. At the beginning of the year, we had that much. Then in the year, that much of this asset equipment is sold, and that much is retired. So how much is left? $38,750,000. So this is whole year, right? 1/10, right? Because it is full. This means whole year. That is part 1/10 plus and $2,450,000, and this is also 1/10 multiply 6/12, because it is purchased in July 1. From July 1 to December 31, 6 months. So if you do that one, all this, this is as you see here, this is $3,875,000, and that will be €122,500. Okay. So in this case, I will take this. No, actually. So how much it will be? Together it will be $3,997,500,000. So the depreciation expense for this is $3,995,000. All right. Let me get all these calculations. Sorry. Right. Down. Cut it. Okay. That's it. Okay. In this case, what we have, an accumulated depreciation for the equipment. All right. A little bit. So debit and the credit again, $3,995,000. So that will be adjustment entry. This is the calculation of how much depreciation adjustment for equipment should be done, right, in this year. Okay. This is done December 31, 2020. So if you look at that one, now we can prepare now other things like accumulated depreciation, like that, for example, for the building. So we have balance 1200,000, right? And the December balance for building is $530,000. So for building balance end of the year is $12,630,000, and the accumulated depreciation for equipment. So we have balance how much? If you look at that one, equipment is 35 million. Let's see how much is 5 million, not 35 million. Okay, we have 5 million. Then if you look at the adjustment entries, equipment accumulated depreciation is gone, 325,000, because it is sold. 325,000, and later we have equipment is expired or retired. It is also gone, $500,000. And May 1, we have $25,000, which is that one, $25,000. The same, this is May 1. And December 31 and December 31, we have two separate one. What is that? 3,875 and 122. This one, yeah, and 3,997,000. 3,997. $500, and we have also $50,000 because of this one updated amount, 50,000. So if you sum, you find the balance here, balance $8,247,500. Alright, let's draw this company. What is the company? Jimenez Enterprises balance sheet. This is partial statement of financial position, December 31, 2020. So only we do planned assets. We have land, how much? $4,900,000. Let me take a bit this side. And building we have $26,500,000, but less accumulated depreciation is $12,630,000, which we get this here. This is we get. So then building net will be 13,870,000 dollars, And equipment, let's look at the equipment ledger account. It is where is that? Equipment, yeah, here 41,200,000, but less accumulated depreciation for the equipment is 8,247,500. 247,500. So you find 32,952,500 dollars. So this is our total plant assets, and plant asset and equipment, you can say like that, doesn't matter. So it is 51 million euro, $722,500. This is our income, balance sheet. So that's all about this question. Good luck if you have such question comes to your final exam.